shorter, then the demanding is more. So that's why we have this kind of transitory. But a lot of debate regarding this, because what happened is economists, many people, Wall Street market don't agree with the Fed, right? That's why I can see yesterday tumbling a lot, because for Wall Street market for forward looking, okay, they looking at this trillion dollars haven't come out yet. Okay, you have physical 2 trillion, you have a Fed they are waiting for the still quantitative easing, buying many 40 billion every month. So those add up together, haven't come into the system that much yet, and people see this going to be crazy. Okay, that's why market is complaining right now. Market is really tell you the Fed don't agree with the Fed. Okay, that's what the transitory meaning is. The Fed is saying, but the Fed maybe believe they can control. Okay, they feel, yeah, this is right now 4.2% inflation, but however they think they have tool to control. But the people worry, what if you cannot control? Remember when we talk about Fed independency, we debate on chapter 16, and that's what another group is, argue about, say, all these nations' economy leaving to this, couple hundred of economists, PhD, do the research, and then they make a decision about where we go, what do we do, and people, feel it's not the right thing to do. We should be democracy. We should not just leave a couple of people to control this economy. And that's the whole point right now. Debate is still debate, right, about the independency. Even inflation, we debate right now. It's nobody agree, like I say. So that's the story, okay? But like I say, this course, if you like it, learning just for interest, for to know something regarding to the Fed, regarding to monetary policy, regarding about banking, regarding about money, it's helpful for you to do anything, even you work in the financial industry or working in the corporation, now finance, still useful because you have some knowledge about how this monetary system work, okay? If we only study for the exam, for the score, maybe you didn't have motivation to learn and maybe didn't get that much, okay? But it's still afterward, okay? You're reading, you're learning, that's still useful, helpful, okay? So, well, that's beyond. Let me talk about exam first, okay? The exam, like a midterm, you're doing that, okay? You saw the familiar under the Blackboard course document, that section, okay? When the exam time come out, you just pop up and you just do the exam, okay? Exams should not be difficult. You're familiar those midterm, you will be okay for the final, okay? So the exam format, like I said, multiple choice, okay? 50 question, and only just what it is like 80 minutes. I give you more, a little bit of minutes, but still multiple choice, right? You just choose one. Pretty much you read it, you have common sense. Good thing is your online exam, you have all the resources, okay? You can do it, use the book, whatever, but it's don't have enough time to read a paragraph by paragraph, because if you don't study, you don't familiar your material, you don't familiar your resource material, then at exam time you want to do it. Like I say, we all human being, we are panic because you have time limit, okay? So you will worry about next question, you will worry about timing, and then you become a panic. I don't believe you can read anything that moment if you panic, you worry. So that's why don't do that. Only thing you have for is looking for formula, looking for something I forgot, I know, but I'm not so sure. Then check a little bit, use the book. Otherwise, you're gonna be kill your time. You'll be so crazy. So that's why is this exam, online exam, it is the time management, how to make your time efficient. Some question you're familiar, you're so sure it's the right thing, it's right answer, you just finish it, move on, and keep the some good question, give the some question you need more time, to you it's difficult, and to other people maybe not, okay? So then you will just spend more time to look in that. So time allocation is important, okay? So that's how you handle your exam. Regarding to the curve, okay? We do the same thing like we mentioned about an exam. You have a midterm, final, you have a homework, you have a participation, okay? All those, everything, I don't missing out, all in, okay? Put it in one, and then those all in those things add in, then I will be curved. Whole thing together curve once, that's it, okay? So that means your all the score put all together, and then the top is one from the get A, right? So the mean, I have to find the mean. Who is the mean? Let's say total maybe a 280 point. That's the mean, means B. I think school maybe requires C, so hopefully I can give you B as a mean, right? So if they require me C, I have to put a C as a requirement. But anyway, you find a mean, okay? So let's say B. Then arrange the B, this range is not exactly said this number, let's say 280 is the mean, and then your 279 is the B minus. It's not like that. It's a whole range about that area, and it will be B, okay? So maybe you have 280, 275, also B, okay? 290, maybe also B, all right? But then after that range, then you know a little higher, like 295. I'm hypothetical, okay? Total score maybe not 200, okay? Maybe 300. I do not know. It doesn't matter just because those whole 4 points come up. Homework, midterm, final, attendance, all those. Remember 40%, 10%, those things come up, and then you will be get the curve. So if the question is difficult, I have to mention this, or some people maybe never listen. First class, I mentioned about the curve. If the question difficult, it doesn't matter, because let's say the highest point in this class, it is 55. So overall, altogether, midterm, final, everything, 55, hypothetical, okay? Failed, like based on a normal time, it will be failed because you're not passing 60. However, this 55 is a top score in my class because my question is tough. So this 55, that person will get an A. That's how curve. That's why the question easy and difficult, it doesn't matter. It's matter is whether you're standing at the top of your class. All right. So 55 is A, 54 maybe it's A. So like that way. Okay. So, but however, let me give you another case. What if so easy, everybody get a 100? Most people get a 100. Let's say we have top 4 people have 100, and then you have next one 99, 98. So close, so good, close. Me maybe already 90. If that's the case, so that means that the score very sensitive. And that moment we're going to looking at the say, you maybe have like attendance missing the class, you didn't participation, homework missing point. A lot of things will become sensitive. Okay, so I hope the question is difficult. So make other things drop off, not big deal. Attendance, not big deal. Homework, not big deal. Now only big deal it is whether you study or not, midterm and the final. So that'd be great, but we do not know. So like I say, if easy, everybody easy. If difficult, everybody difficult. So you don't need to worry, concern about that. All is a fairness. You study and you may be easy for you. Okay, somebody didn't study, maybe didn't do well, but that's okay because, for example, some student working this semester suddenly get a job, or some people working. I had a student who working on the Capitol Hill for this guard, the National Guard, that kind of job. Suddenly something just take longer than they thought. So what you can do, right? So this uncertainty time, I understand that. So you didn't do well, it's okay. It's nothing big deal. Next time learning well, next time doing well, but this course is for fun. It's for fun, for good to know something happen for you personally. Okay. So that's what regarding exam. Yeah, question just pop up. Otherwise, I'm starting talking about review. Okay, so
Professor, I have a question.
Yeah, go ahead.
Are we gonna know where we are like in the class if we're like
you will. Just like a midterm, remember midterm, you immediately know statistic mean, right, in your class, and then they tell you statistic number, say how many above, on which range, just like you saw the statistic column, that one. You will see the mean right away. in the final one, but you do not know the curve one yet because I need to download all the data. Then I will post your score. I will be doing analysis. Once I post, that's it. All out there means I already calculate everything, already give you the curve, and you will see your score, midterm, final, others, and then you will see your curve. And I give you a couple of days for Blackboard there, and then after that I will post on CUNY first. All right, so your final, for example, yeah, you're welcome. For the final exam, just like that score, you will know immediately if the system you submitted. Okay, I will mention that again. So once you submit it and everybody else done, system will analysis you, say what's the mean in this exam. Okay, but only this exam, you do not know the overall. I have to do this calculations overall. Then we mentioned about the exam system for the midterm, which is good, but the final, I have to mention this again one more time because I want you to know you have to submit the exam scores, final exam by yourself the best. Okay, when you submit it, you know your score right away. Which better, you go home, you know your score, you don't be anxiety there. But if you don't, and the system, just in case, because right now it's final exam time, we do not know how system works. We don't even, I hope a system working very well, okay? But that's a system didn't submit yours and you didn't submit it. You say, oh, I take a extra time. They give me extra 5 minutes. You just do it. You take the 5 minutes. But it's okay you're doing that because you think it's not your fault, it's the system fault. But remember, system fault, but system have the recorded. They tell you exactly this person take how many minutes, how many seconds. So we have to be fair to everybody. So you take a 95, they take the 90 or 80. So that's not fair. So we have to adjust it. Okay, so that means you have to drop your score proportionally based on the timing you use. So that's hurt you a lot if you're doing that because don't take advantage of a system, even though it's not your fault. But however, it's your fault. Total is 80 minutes. You use 95 minutes, and then you it's wrong, and then we have to adjust it. Like I said, so that's what adjust. Remember, it's multiple choice. If we adjust, cannot just half of the question. We have to adjust the whole point. So whole question is gone. Maybe whole 2 questions based on the proportion of time. That's the whole point here I mentioned, because this exam, any exam, online exam, is timing, because you have open resource, you have book, you have everything. Everybody sit down there have enough time to get a 500 point, everybody, right? So, but that's the whole thing is we need to control the time. So that's, don't take advantage of a system because it record everything. We know who is used a long time, okay? So that's the one thing before I forgot this, I want you submit it, system submitted, but don't take any single time, minutes, actual, because that will be trouble for you. All right, so let's do the review. Chapter 8.
Professor,
go ahead.
I had a quick question.
Yeah.
Will we be, once we open the exam, will we be able to see all the questions at once, just like we did?
Yes, thank you. It is. It's exactly like the midterm you ask for, right? Midterm you ask all question out in once. Yes. Okay, I did it exactly. I don't want to surprise you. Everything like a midterm.
Okay, thank you.
Yeah. They should not be habit. I will double check. Midterm also should not be, okay, because I think the pool random random, I don't know, maybe I have to verify. Your pool definitely will be verified. Make sure not random questions. Maybe it is not same question. Some question is wording exactly same thing, maybe, but change the number or something tricky.
Yeah, same for me.
Good. Okay, so then it try not be there, but if it's duplicated, you're lucky though, but it's not, won't be worried about that one. Okay, like I mentioned again, okay, then if a question from the system, from my end, from computer, from system, you don't worry because I have 50 questions, right? I can give you a lot of score. If this question problem to everybody, don't worry about that question. I will just wash it out. Okay. I can give you actual bonus one, but I don't, let's kill time. I don't want to do that. I don't want hurting you because it's final. I think if system have this kind of question, like I mentioned, anything wrong, just don't worry, just move on, take that time. And then people, if you all feel this is a public question should affect everybody, you can email to me, tell me that later on, I just remove all this, okay? But for your personal question, just you have to make sure, take care of your own business and make sure you don't fail or don't missing questions, okay? Okay. So chapter 8, okay, chapter 8, basically you just, people ask me questions, conception or not conception. In this, well, each chapter I mentioned a little bit, okay, but mostly in your chapter, in your final, is most chapter concepts are the conception, most of them. Don't have that many calculation like chapter 5, chapter 6. We have a bond calculation, stock calculation. This we do have a couple. I will mention when we been there. Okay, I will mention there. But chapter 8, it is tell you. Remember chapter 7 tell you stock market is so good, it's so important. But this trying to tell you not so sure because. Banking loan, it is big volumes, means the market really through the banking loan to do business, the bank loan becoming very, very important, okay? So chapter 8 trying to be emphasized there and then give your couple, because once we talk about loan, okay? Loan regarding the credit, okay, default, right? So that's why immediately you talk about, you make a loan, you could have this asymmetric information problem. It could be have a moral hazard problem. So then once you have that one, first we'll need to know what's those problem, right? What definition of those, and then then the chapter talk about how to solve the problem. Okay, so like you can say this conception, yeah, conception, because nothing numerical calculated, but the logic there is like what I say. If banking make a loan, and so could it be have this moral hazard problem and adverse selection problem? What's the definition? Then how to solve the problem in that chapter. So once you talk about loan, like I say, you have to deal with it, okay? Deal with this information situation problem. So that's chapter 8, okay? So chapter 9, I told you chapter 9, you should watching the Inside Job, that documentary movie. It is, but you don't, it's okay, read the chapter 9. Chapter 9 is talk about that time. So regarding the financial crisis, so you need to read it. So how that happened, what happened, why that happened, right? So that chapter 9, financial crisis. So that's that chapter 9. I won't talk about this. Nothing I can talk, right? Just financial crisis. Regarding to movies helpful because you're watching, any question pop up, you're watching a movie just like happened to you. You can remember easily and can answer why that happened, what happened. So that's in there, okay? Chapter 10. Yeah, Inside Job, a documentary movie, okay? You're quickly watching because right now final, I know many other courses will be require you, but still if just for fun part piece, relax, you study, change the subject is relaxing too, okay? So you can so busy on the other courses, reading so tired, then watch a movie, that's okay. And then go back, read the book. So chapter 9 is there, okay, like I say.
Oh, Professor?
Yeah.
Will there be questions that are specific to the movie or the documentary, The Inside Job, or is it only meant to give us a background of the financial crisis?
It's just focus on chapter 9 of that, all the question like what happened, why that happened, what's the financial crisis, that kind of thing, right?
Okay.
Yeah. So for
Okay,
example, financial crisis is the disruption of the economy and also this kind of thing. Yeah, if you didn't watch it, it's okay. Just go read the chapter. Okay, so chapter we didn't talk about because we want you use that time to watching a movie. It's good to watching it, but if you don't have time, don't watch it after the exam. Watching again. But that's the chapter. Okay, chapter 10. 10 is so 10 becoming go to very serious about why we learn this money banking. Okay, so this piece is banking. So 10 has a lot of detail regarding how bank works. Okay, banking balance sheet, you have once you mention about balance sheet, you have to know banking assets, liability, and think about the banking. Bank have nothing else. It's just all the money on the assets, right? So what's kind of assets there? So like I said, the banking has CDs, they have many other things. You need to know those definition. At least something you need to know those asset size, right? Then you understand banking liability size. So understand the balance sheet and the liability side, you know, what's your money, you and me, depositor money is their liability, right? So certain thing you needed to very clearly about the liability size, each components. And then bottom, it is like we say, it's a bank equity, but we call bank capital, right? So every balance sheet at the end, liability side, it is supposed to be equity if it's a public corporation. But public banking, then it is a bank capital. Okay, so now you see the balance sheet that this way from bigger picture. Okay, close to your book, just drawing the line balance sheet. Okay, assets equal to liability and equity. Then draw each line. Which one is in the assets of the bank? Which one in the liability? Who? Then you will clear. Then you know bank capital. Then we surrounding this balance sheet, we talk piece by piece how bank manage this balance sheet. All right. So you understand the balance sheet, understand components. Then you need to understand how they manage it. So they have to manage it like asset size. How they do that? Okay. Because like JP Morgan balance is huge. You know, $2 trillion balance sheet. JP Morgan CEO don't even understand each components. But he do know whole big picture about where's where. So therefore, they have units, department on assets, and they have department manager liability, and then you have department manager capital. So that's how big a banking have to work in that way. It's very, very difficult, right? So understand each component. What's that mean? What definition? For example, CD. What's a CD? What check deposit? And what's the security banking holding it? How bank can make money? Bank can make money mainly from loan. So you have to take care of loan. Again, remember we talk about loans. And then you go to liability, all those components you need to understand. They borrow too. They like corporation, they borrow. So that's liability. Then borrow can be security bond, right? Issued. Or could it be just borrow like a loan? They borrow from from the Fed, from anything. So then we manage this balance sheet, okay? But manage balance sheet, remember, we tricky little by little, very tedious. Say the banking have high capital, low capital. What happening to the capital? Why low capital? Then later on, we know it is we need adequacy, capital adequacy, right? So chapter 10 is very, very important. And then this is what I'm talking right now. Go to the banking capital, that piece. But you also before that already. Banking have all those assets, all is interest rate related assets. So how to manage your interest rate risk? Banking have loan, how to manage your credit risk. All right. So that's becoming liquidity management. Remember banking liquidity issue? Why this banking could be insolvency? So a lot of things surrounding this. This is very, very important chapters. A lot of simple bank, but give you a full story about why banking is so important and why always the Fed bail out the banking, help bank, because when they fail, we fail because your money's gone, my money's gone, right? So those surrounding this balance, you're going to be do little by little and understand why each one is a manager. And then at the end is this capital adequacy. We calculated those the multiplier. Okay, so you know why is the banking, why have to be adequate? Why they don't put a lot of capital? They don't want to, because put a lot of capital, the banking don't make a high rate of return. But too little capital make a high rate of return, but you could be risk insolvency, remember? So those kind of things you definitely need to know. So in this piece, only one very, very important calculation piece is regarding to remember we manage the liability and assets interest rate, that piece of the duration. Remember the match also the balance sheet. We talk about this. We say, how do you do to make sure this balance sheet hedged? Means won't be anything risk. So then you make assets, rate sensitive assets versus the rate sensitivity liability match up. Okay, so in here we have calculation about duration calculation, gap analysis. All right, those are, remember, all supposed to be in the exam, but the only thing is which one pop up to you. Okay, so in order to cover all possible, get a better score, you had to know everything, so then you can cover which one pop up. Like I say, is you cannot last minute reading the book. That's you first of all, you read 1,000 lines, you don't remember any line because you're in the panic situation. Okay, so like I said, chapter 10 is very, very important. Okay, I'm done. So after chapter 10, we have chapter 14. 14 is future derivative, right? So here's we mentioned a couple of things. One is hedging. What means hedging? You know, hedging is eliminate risk, not for your speculation. It's eliminate risk. All right. Remember, even you hedge the bond, then the bond, even if you don't hedge, maybe you make more money, but you hedge it. You protect the principal, but you don't make money. Okay, you didn't speculate it. So that's hedging, one thing. Then we talk about you know, interest rate futures. So we use that example. That example is a very good example. I give you both direction on this bond futures, right? 30, you know, 30 years maturity that bond, and then we wanted to hedge it, just hedge 1 year. How we did that futures hedging. Okay, so that example, they just this hedging use wording. They didn't use a mathematical way. They just wording tell you how that works. If interest are moving higher, moving lower, we give you the reverse, the other section. What's that? Your question? Okay, so that's why you need to understand very well. Okay, this is future that hedging, because that's a good example. I'll give you hedging only that one example in the book, so we use that one. That one must be pop up in an exam, but if pop up to you, you're ready. Okay, so that's the hedging tell you. Then we mentioned about the options. Now I didn't mention options, many things, but I also mentioned about the break-even point. Okay, you guys did a good job. I asked you, you right away gave me the answer. Doesn't matter put or call options. You needed to know the break-even point, right? You didn't learn anything valuation the option. This is not the derivative course, but at least you know the break-even point, right? So I did it. We did it in the class. You needed to know. And then you needed to know this is a different thing, right? Option, what different from future? What's the future different from the forward, right? Interest rate forward. So those are forward and the future and option, they all derivatives, but they are a little bit different. Okay, so you needed to know those things and how that works. Then we mentioned about a swap, interest rate swap, and we have chart showing you that very good. And the credit derivative CDS I mentioned, I use AIT as example. So derivative supposed to be very, very, very deep, complicated one, but actually in this chapter, we just touch each single one, give you basically this consumption, what's this, what's that, and then know a little bit interest rate hedging, that piece, sensitivity measure, options, a little bit, just know option you need to pay premium. Therefore, you have the right to do something. But for the forward and for futures, you don't have this kind of luxury, say you have right to do something. You have to do it. If you have this contract, you have to do it. But selling those options, you are seller or writer, writing call or selling the put, you don't have the right to do. You have obligation. The other person who hold the contract, they do whatever, and then you have to comply. Okay, so that's why we mentioned this before. Okay, so that's the 14 derivatives. 16 is a structure of the Fed. So just like how many people in here, how many people in there, what they do, you know, chairman and why, and then remember they have the 14-year, who have 14-year term, who don't, and those who decide the discount rate, discount window, remember? Now you know pretty much, you know, I know you have your classmate mentioned about that Fed control the couple like a discount rate, like accessory, and then keep control this way and cut this window. So then Fed fund moving around within the window. Remember we say is then your classmates may say is the Fed manipulated the situation, but it is to control this window, and that's really true. That's why I call Fed fund rate target rate, right? Fed fund target rate because it target that window. So then Fed fund never moving out of this is chapter 8 actually, but chapter 16 is they decide who control those discount rate, who control those excessive rate, and that's why I use this setup and to understand 16 there, 18 there. Okay, so the organization, right? So just nothing I can help you. Just read this organization, how the Fed set up the way. You know, you had 12 district banks, so they were independent each other. They're independent, okay? That's why you have 12 districts equally powerful around the nation of US. That's why this way set up a little bit successful than compare before 1913 when they tried to create a central bank, but they worry about the power centralized. So that's why they do this way. 12 districts means they don't centralize. Like the central bank in the California, Florida, they total different power means like they are equally powerful. Okay, so you cannot say, oh, I'm a Florida, you are not. It's not like that. That's why this way is have a little bit sustained for until now, since 1913. So that means work out well. And then they vote. They 12 those banks, how they vote, you read those one, you know. So then you basically understand the structures, okay? So like I said, I cannot help you that much, just read that structure. Then you go to 17 is the money supply process. This is another very, very important chapter because remember, now you're going to Fed put a money supply in the economic system. How they do that? Okay, so how they do the process, you can see, I said banking, Fed is a bank of banks, then they open market operation. Remember open market operation, the open operation means they buy or sell. They can do either way. They can do both directions. Open market operation, it's very, very important monetary policy process. Okay, this is very dynamic one, very important one. Okay, so open market operation in this chapter and how they doing that, and how the Fed put the money in the economic system, how the Fed take the money back from the economic system. Right now, the Fed is still, like I said, monthly still 40 billion in the market, selling, buying those treasury securities monthly. So that's why I say is you guys say is trajectory or not trajectory of the inflation. Is the Fed is still doing that, and the fiscal policy $1 trillion continue put the money. That's printing money. Okay, you do know that, and nothing back up those money. They hope they print money, and then our productivity catch up. Where economy is booming right now. Okay, so if productivity catch up, then means it's okay, because the productivity increased, your inflation won't be a big deal. But if not, so this is the word of gambling. Just like you said, I may be rich, or maybe I'm not rich. Who knows, right? So everybody thinking we're rich, we're spending now. But you should have your money already by spending, but we don't. We are not. That's the whole point. They print money. Okay, same thing here. Okay, when they open market purchasing and selling, you can see the money how they put in the system. Then they print the money and how they take money back. Okay, that's how operation telling you. And then that's why you have high power money. Okay, what's a high? Then you saw the multiple. Right, so the monetary money multiplier is so important, right? Give you some indication. Say, if a Fed put billions, that's like 300 billion. Then if multiple is 5 times, that means 5 times what a Fed put in. That means you print the 5 billion, then turn out to become 25 billion. That's a lot of big deal, right? Money really worth nothing. Then that's what right now market worry. Okay. So that's a multiple, very, very important multiple, okay? Very important. And you have to be detailed. Why? Because sometimes trick you. the equation just look like it's a tiny sign. So tiny something difference. And the test, you'll see how you pay attention about this, okay? And then after you get a multiple, then we use this multiple to test this two financial crises. One is 1929, one is the 2008. You can see difference, okay? You can see the difference because both times what happened, and then we learn from the previous 1929, and this time we put a lot of money, we learn that. So then what happened? You can see the things ratio, what happened. So that's the final, use that model, test this both recession data. Then result look like differently, okay? And then, so that's another thing you needed to read it, understand it. But like I said, you have book, bottom line, you always can turn and flip a book, happier, but you needed to familiar your material. And remember, like I said, still you compete with a classmate, okay? So you don't familiar, you forgot one question, boom, you drop this one question point. The other one, they did a good job and then they are ahead of you and the curve is showing up, right? That's the situation. Okay, so that's 17. 18. All right, 18 is last one, so you easy for you because you still have memory about this 18th. 18 just finally to get the Fed fund rate, target rate. Remember the Fed fund target rate, how Fed targeted. So first difficult piece is to how to deriving that supply and demand curve. How they argue to get that curve, okay? Supply demanding of the reserve. Remember, reserve is a fact. It is the banking have to have the flexibility to choose where they wanted to put the money, the reserve on the Fed. So that's why they can choose, excess reserve, more or less put it in there. So they like a human being. It's a good deal. I put it in the Fed, put it on the excess reserve. If not a good deal, I'm not. So that's why becoming compete. So that's why you have Fed fund rate, you have excess reserve rate, you have a discount rate. Remember, I put all the rates surrounding there, and then you can see your analysis compete each other and see what's the banking doing. Banking, just like human being, choose which one benefited for them, and they choose it. So we derive that supply demanding curve. So once we get that curve, that easy, it's just moving around about what's respond to demands, what respond to this happen, that happen, then equilibrium starting to moving. So now because the curve now like a normal curve, supply demanding curve, so you have to make a condition, say if the beginning the curve interception equilibrium of the Fed fund rate where located and it shift right, you better just draw the chart to see. You cannot memory those things, right? So then you can see the change or not change of this the Fed fund rate. Okay, that's totally where they intercept beginning with. So once you know how to move this supply demanding curve shift, then pretty much you just find out the bottom line. It is the Fed fund rate, no matter how the Fed change policy, whatever, never moving above discount rate and never below excessive rate, excessive reserve that interest rate pay in there. So now you know within this window they're moving around. That's why I call Fed fund target rate, and that's it. So then once you get that conclusion, you know the equilibrium, and pretty much you're done this chapter, okay? And then so other things are pretty much just like you just read they talk about again about the recession moment of 2008, what happened, and to use those analysis to go back to test those financial crisis moment. And that's it. And every chapter we touch a little bit about European and other banking, how they're doing. It's same logic, just number differently. Maybe use 3% of required reserve ratio, we use 10, maybe something like that. But that's not big deal. You can easily just looking at it, or maybe we don't even have that kind of question pop up because we don't care about other. As long as you understand US, you're pretty much very good, okay? And that's it. So that's what it review. Any question here? Any question? We good? Oh, that's the options, remember? Let me give you example. Let's do one more time example. Okay, so you saw my whiteboard right now, right? Can you see it? You see whiteboard?
Yes.
Okay, good. Okay, let's do this one. Okay, so this is, for example, let's do the call first. So call, okay, call option. So it's like this. Okay, so this is a call option profile chart. Okay, and then this horizontal, this one is a stock. All right, so stock moving in this direction. Okay, so let's say this is the strike price. Okay, so let me type in strike here. Strike, okay, equal to, let's say choose whatever stock. Let's choose strike equal to 100. Choose the strike 100 equal to 100. Okay, so you buy this call, you pay, you put some money here. Let's say you pay. Let's say you pay $2. Okay, so negative because you pay $2 per share. Okay, we all talk per share right now. So then I'm asking you. Let me see somebody else there. Okay, it means you can figure out. So based on my drawing here, it's a call option. What's the break even? So, okay. So yes, because you pay $2. So when stock moving above 100, you're starting to make money, but you pay $2. So that's why this P is $2. So that means if from 100 to 102, that's exactly what like Andrew tell us. So 102 is break even, means this starting from here, you are really net make money. Or starting making money. So 103, you started making $1. So 105, you started making $3. Okay, so start moving this way, and this is your profit, net profit. Okay, so that's break even. Let's do the put. Okay, I do this way. Put is like this. Okay, sorry, this is not the direction is wrong. Okay, so now start going. Let me erase it. Okay, start go to this direction, same direction, okay? And then choose put. Okay, same thing again, let's choose the strike is 100. Okay, so see here, okay? So that's the same thing, you buy the put, pay $2, okay? So you will make money when stock going down. So you choose the strike 100. So going down to a certain point, you're starting to make money. So you starting to make a positive profit. So what's the stock price reaching? Yeah, 98, right? So 100 going down to 98 here, break even. Okay, and after that, it go to 97, you make $1 more. You go 95, you make what? $3. So this is break even is 98 because you pay $2. Okay, so 98. And that's break even because this must be, this have this $2 equal to this $2. Okay, and after that, you start to make money. That's break even. This is option. This only thing is because option you pay something, because you buy this option, get this. You buy it because you have this right to do something, right? You have, that's why. Okay, that's it. So that's the word of break even. Any other question? Okay, like I mentioned, all right. This course is helpful. It's a fun course. It's good for you to understand why market fluctuated because the Fed policy and the fiscal policy. That's why market can see it's very useful, very, very important for you personal or for you in the business. So even though you feel like nothing, everything touched a little bit and not concrete for one field, but how all information have to in, then you can make a judgment call. So it is good for you to in the future, okay? So study, read a book, you read a book and understand the slides, or just focus on a book. If you have memory, photographic memory, it means read once is good, that's it. But if you're not, it need more time. But good thing is that your online exam is much more calm. Not don't need to nervous because you know. But all you need to know is, I need to tell you, you need to take the exam. Somebody, you know, at the last minute walk out, say, oh, I don't do it. I didn't study. Then you maybe waste your time and have the next semester just retake it again. That's a bad one. That's cost you too much time to do the same course. So better just take a, you know, couple days to study hard and understand, finish this course. That's the only, I just mentioned a couple of people like that way. It's good to finish it, okay? So, and then like I said, online, so it's not difficult. Compared to midterm, you're already done. So you're also familiar how to do it. But you cannot last minute tell me, oh, I have an internet connection problem. Or any problem, but at the final, it's becoming your next semester's headache. You don't do it. Don't take this chance. There's nothing I can only handle is a fairness. You take the exam, you have a score. You don't take exam, nothing I can do. I cannot make up for you. So you better do it, and then you do it, you're trying to doing well, compete with your classmate, basically. You have more time, you study more, your score will be better, okay? Every course, not just my course, okay? So that's the only thing I can tell you. But otherwise, you just showing up on the exam and you'll be okay. Any other question? Okay, that's it. And then good luck. You have so many subjects. You know this final. Everybody wanted you bring. So just working hard, and that's it.
Thank you, Professor.
You're welcome. I hope you're all doing well. Okay, and that's it. So have a good summer.